presented by Tackle Trading. Get it again.
What's up, tackle traders? And hello, YouTube. This is Frank coming to you with the market recap for Monday, the 14th of January. My first technological glitch of the new year, as for some reason my webcam did not want to cooperate today. I assure you I am here. I'm not just a voice on a computer. So great to see you, Andy. Hope everybody had a great day trading. Another, for the most part, at least broadly speaking, uneventful day in the market. We did see some things moving. You saw PCG really plummet after, of course, they've been struggling a lot, and now, they're looking for some bankruptcy protection. You saw Citigroup have a nice little move after earnings, but I mean, really, as we look at the indexes, we'll see that not a whole lot has changed, but maybe, just maybe, there's some subtle things going on. And good afternoon, Tanner. And yeah, for me, it happens more often than not. I'm just thankful I made it till the 14th. So, and I'm glad that it was this one. We've had some interesting technological issues here in the market recap together. So by my standards, I can live with this one. So looking ahead to earnings, of course, we are there. We are in earnings season. Again, like I said last week, we have about 40, give or take, S&P 500 companies that are reporting this week. Citigroup, of course, reported this morning before the open to a mixed bag. They beat the earnings estimate, but missed on revenue. So not a whole lot to gather. A lot of the financials will be reporting this week, including tomorrow before the open. We've got JP Morgan Chase, we got Wells Fargo, two big name financials. We also have United Health Group reporting before the bell, as well as Delta Airlines. So we got a few companies to be keeping an eye on as we get into earnings season. No doubt, should be fun. I used to really dislike earnings season, but I enjoy it nowadays. So as you can kind of see, we kind of followed suit with what we've been doing the last few trading days, where we gap down on the open and then we kind of fight back throughout the course of the trading day. And today was really not a whole lot different, although whereas the last couple of days we've been able to work into basically the highs, right? We know we're using this, this major levels of resistance across the board in our market, 2,600, of course, on the S&P. The last couple of trading days, we were able to rally, towards the highs of the day. And here today, we did rally, we gapped down, we rallied up, but we really closed pretty flat. So we didn't get quite as much, bullish movement as we've seen the last couple of days. Not really a sell signal necessarily, but just something maybe to keep an eye on. We all know that we're not going to hang out right below resistance forever, right? Sooner or later, we're going to have to make a call. Maybe that is tomorrow. So we'll have to wait at least one more day to find out. As we look at the daily chart, again, really not a whole lot is going to change when we look at our indexes. Just a little bit of very subtle, and certainly I wouldn't call it a signal to say, yeah, this is ready to sell off. But for the first time, we put in that lower high and lower low on the S&P 500 and our other indexes as well. It's a little easier to see when we look at the Russell, just because it's a nice red candle instead of a little green doji. But we did see a little bit of downward movement here today. Certainly, I don't think at least it's enough to make a call one way or the other, but definitely something that we'll want to keep an eye on as we move ahead into tomorrow. Again, really on the S&P, sound like a broken record, I know, and one of these days we won't sound that way, but still hovering right below that resistance level in the S&P. Same with the NASDAQ. We did see a little more selling. That was down almost 1% today over in the NASDAQ, but really the same price action developing over there as well. So a little bit of doji action off of the gap down. We're still kind of using that resistance zone that we've been monitoring for a while and basically spent the last week just hanging out at, right? Who would have thought in this market we would have been able to just sit at resistance for a week of trading with the movement we've seen over the last couple of months. So, but you never know what's going to happen, right? You always prepare. Same deal over in the Dow. Again, pushing down just a little bit. We were closing closer to those, round numbers last week, but really not enough to really say, yeah, we have changed technically. The only one maybe, and I would say maybe, that you could argue that we've had, that first sell signal would be the Russell. Of course, here today, very, very bearish candle, unlike our other indexes that we really were able to rally off of the gap down on the open, and maybe not the most impressive rally ever, but they did rally. We really kind of saw our Russell close near the lows of the day. So, we know that this is a resistance level, and Russell's kind of been ahead of the pack, during this sell-off that we've experienced over the last few months. Again, I'm not saying that we should, throw all the chips into the bear market, into the bearish setup just yet. But again, things that we want to be keeping an eye on going into tomorrow and going into next week as well. And good afternoon to you, Adib. Always great to see you, and hope everybody had a great day trading. A fun day for cash flow because really not a lot happened. Again, individual stocks, we saw some movement, but kind of a nice boring cash flow type of day from a broad perspective. So if you're been looking for opportunities for bearish retracements over the last now week, they're still probably intact, probably as across the board. Haven't seen, at least what I would consider entry points develop, but those patterns are probably still very much in play as a general rule. As we kind of shift into our sectors, most of them were uneventful as well, including the material sector. Looks a lot like the overall market. Gap down, fight back, hovering. We got a little bit of room to our swing low here, as well as our trend line, which is pretty much how it's going to work itself out, to lining up here, it looks like. So we still do have a little bit of room in there, but like we kind of talked about on Friday, for things to break resistance, on any large scale, we're going to need the market to do that too, right? We can't, it's hard for the broad market, things all over the place to be breaking out when the market's just, kind of consolidating just below resistance, but really not a lot of change over in our material sector. We still have a pretty good idea of our short-term, upward trend line that we're working with, our previous, resistance level, which of course can act as a support zone for us as well. Interestingly, we did kind of use that 9 EMA as our intraday floor here today over in the material sector, as you see, quite a bit. Over in energy, fought back pretty nicely. They really did fight back nicely after gapping down on the open. We did see some selling over in crude. We continue to, consolidate right at that resistance level. Not enough to give us a signal just yet, just another data point. Yeah, we're not crazy, people. This is an area that traders are keeping an eye on, right? The more, we test it, the more that becomes more and more clear, at least I think so. Definitely some interesting bearish retracements in energy if that is where your head's at. Financials, led on, on the back of Citi's earnings. And again, maybe not the greatest report ever, but they did beat the estimates. I didn't take a deep dive into the report, but I know it was a little bit of a mixed bag. But the financials did continue to push forward, taking out that little top that we built last week. Probably, this is probably going to go the way of these big earnings the rest of the week. So, it's hard to, say too much one way or another, although we do still have space, in my opinion, at least in the financial sector. We're a lot closer to 25 following today's little break of that intraday ceiling we've been working with. We do want to keep an eye on 25, I would say, but still a little bit of room to run over in the financials. Like I said, one thing we do want to keep in mind, there will be plenty of earnings that can and probably will impact the way this ETF develops throughout the course of the week. But from a technical point of view, I still think there's room, a little bit of room before we run into significant challenges across the board over in the financials. Industrials, very dull, not a bad day necessarily, closing about even down 0.01%, but really we continue to hang out right at that floor, just below that, 50 period moving average. I think you want to see those things get, taken out before you really are comfortable, before at least I'm comfortable saying, yeah, there's another leg to the upside on the industrial sector. But we, again, much like the market, hovering at resistance, folks have had opportunities to take profits, and they've had profits to take after the last couple of weeks of bullish movement. And that's what really catches my attention with the way the market's behaving, because I'm a wimp. Everybody here knows it. Everybody who knows me knows it. Oh, it's a resistance. Get the heck out of there. Why isn't everybody doing it? But we are definitely seeing, some resolve. The bulls are not the same bulls that maybe they were back in December. They're willing to at least fight for the stocks that they believe in. And certainly in the industrial sector, really no difference over there. Over in tech, hanging out right below that old floor, it's clearly becoming a little bit of resistance for us over in the technology sector. I think we've talked about this last week too, if we can take this out, there is a little more room to the upside in my mind. Over in tech, we'll probably be pretty picky about who we're working with, but really not a lot in our way until we work into that falling 50 and that, of course, trend line that has developed for us over the last little while. So we want to keep an eye on that. As you're kind of looking at these things, if we do see some selling, there's going to be bearish retracement candidates in virtually every sector, I would imagine, that you're looking at. So, always we kind of think, hey, what's propping this thing up, right? What's holding me up? So I don't think I would call it that. I mean, it's certainly something I think I wouldn't argue tremendously against because of kind of where we are. But I would kind of, with how already taking out this support zone right here, I wouldn't say that just yet. I would look at more as kind of a retracement situation. Like I said, I wouldn't really put up a huge fight with you if you wanted to call it that. We're kind of keep an eye on this zone right through here. But I think this is kind of where I would have identified that kiss goodbye personally. Again, right or wrong. Short term, I would have been right. A week later, I'm very wrong. So, but that's how I would at least be looking at it. That looks like a challenging area for tech, but if we can take it out, it looks like there's a little more room to run over in that sector as well. Staples, they really didn't, do much today. Again, whereas so many of our other sectors were able to kind of mimic the market, rally off of those lows, and close close to where they, closed on Friday. We actually weren't able to do that over in the staples. This continues to be an area that I personally am not a huge fan of. I do think that as we're developing, we can kind of start to identify two price zones as kind of the potential buy or the potential sell. Maybe a little longer developing would be ideal, and I would definitely think for me it would be. But now that we're kind of building off of this support, we broke out, we pulled back, we tested that old resistance as some support. We've got some overhead hanging out at 52. I think maybe that's a little bigger deal than some other traders out there, but I think most people would agree to at least keep an eye on it. I think we're looking at a little bit of range with some indecision right now in my mind over in the staples sector. Might be some opportunities on the individual stock level. I would not be opposed to that either way. But really, until I see it come out of this range, I'm going to be kind of treating this sector with a little bit of a neutral type of a bias. I probably still lean a little more to the bear side, though, if you made me put plant a flag or something like that. But I think we can have a pretty good amount of information now to know that's kind of between approximately 51 and 52 that we are working with in the staples sector. And hello, Abel, always good to see you, my friend. Hope all is well. Hope it was a nice weekend for you. It goes by fast, but luckily the market gets us out of bed on Monday and we're ready to rock and roll, right? So utilities, rough day. Now, PCG, again, those of you, I know you guys already know this, but for anybody who maybe hasn't had a chance to see PCG, of course, having all sorts of troubles with the wildfires and bankruptcy rumors, and then it looks like they're looking to figure out some plans, some bankruptcy protection going forward. Huge gap down on the open, lost half of their value, over half of their value here today. So that didn't do the utility sector any favors, but we did see a lot of selling into that old support zone that we've seen, in our time together. This is pretty much all we know, right? That utilities kind of plays off of this range. Interestingly, we did hop off of that nicely on the intraday. I don't like the price. I understand, I guess let me put it this way. I understand folks who are willing to bet on the support holding. I wouldn't argue against them if that's where they were coming from. But like I said last week, and today doesn't change my mind at all. At all. It really, for me, I can't see a very clear path to utilities in the short term, at least to the bullish side. Again, people buying off of support from a risk to reward standpoint, I do get it. That's just not my style. I could understand buying a break up here, but I'm going to be very concerned about this trend line that's going to be not too far ahead of it. For me, and again, things can and potentially will change, but right now, I can't see a great scenario. It's almost like it's in a weird version of natural gas where it's really difficult from a swing trading perspective. And then if you look at some of the individual components of that utility ETF, they don't really look a tremendous amount better. You have knee over here, kind of using its 200. So we've got that going for ourselves, but we've put in those lower highs and lower lows. Maybe if we break on utilities, an individual company might be something more appealing to me. We took out a trend line over here in Duke Energy just one day, and we did rally off of the lows, but we did take out support, trend line. So on an individual level, I don't think those utility stocks are looking all that impressive either, from a bullish point of view, at least. So I'm going to be probably boring when it comes to utilities in the in the immediate future. We'll see. We'll see. But right now, I have a hard time seeing great trade setups in there. I didn't find any for my watch list going into this week, and I tried. So over in healthcare, we continue to churn, again, showing a little bit more weakness in the healthcare sector than we are in several of the other sectors, but really kind of following suit with the general price movement where we're kind of consolidating. Again, I think we can kind of look at this as our floor, this high that we put in as a little bit of a short-term ceiling that we put in on Friday with our next challenge at $89. So really, and I really feel this way, whether it's a break to the upside or the downside, I do think that there are some areas that things that we could work with once we come out of this range in this sector. I feel like they're better set up, whether it's bullish, breaking out like a Merck or something like that, or things breaking down. I think there might be some trades. It might take a little later in the week, and of course, we're probably going to need to come out of this little consolidation and before any of that happens. So, but I do think we have a little more information in that regard. A little more information over in the discretionary is now for the fourth day, we're using that trend line as that intraday resistance level. And continues to hold its own at that resistance. Reminds me a lot like of the broad market, where to me, this is a very clear area to sell, just from a pure price point of view. Why wouldn't just sell here, from a technical perspective? I don't get it. I would, right? I certainly wouldn't buy here. So much like the overall market, but we're continuing to hover there, showing a little bit of strength. I don't think I'm the only one who's identified that trend line by any stretch of the imagination. Very interesting price movement that we're seeing over there as it really is putting up a good fight as at that resistance level from a purely, maybe those first signals. If we take out this low right here that we've kind of bounced off of today and developed on Thursday, that could be maybe that first, point of, well, maybe we actually are going to see some selling over there. Maybe that's a little more clear if we look at it on, say, a 15-minute time frame. You can kind of see that it looks a little bit like a descending pattern developing there. Again, that would just be the first signal. Not everybody, is going to, and I certainly would agree with that, move in on that, area. But that is an area I think we can watch. If we're looking at this from a bearish perspective, that would kind of be that first shift on that intraday, if you will, getting us into maybe a little bit of a downward, at least on the intraday, which is of course where it all starts, right? Can't go down on the daily chart if you're not going down on the intraday chart. So I think that's an area that we can keep an eye on. Not necessarily to say that you should be bearish there, but I do think that is a zone that we can look at from a price perspective going into the next couple of days. Over in real estate, ran right up to this old bottom that we've been keeping an eye on as of late, smacked into it, sold off on the intraday fairly reasonably. It wasn't just me. I know I felt like I was kind of a little bit more cautious with real estate than some people I was talking to. I thought that that was an area that we definitely should have been watching, and at least for today, caused us a little bit of trouble. If we can push through that zone, like we talked last week, really there's a little more room to go before we get into some challenges, in my opinion, at least in real estate. That's a big if. And then we do have to consider what we think about these, flat line 250 period moving averages. When we're sideways, when they're flat, I'm not as concerned about them, right or wrong, as I am when we're trending into them. But I always keep an eye out for them. So really, saw quite a bit of price, of selling once we hit that high point. Again, it wasn't a dramatic, move or anything like that, but it was a pretty clear move to the downside off of that high, or off of that last low. So it doesn't look like it was just us keeping an eye out there, but we are continuing to see some overall bullish momentum. So this is going to be an interesting fight. Does resistance win, push us down? Even then, that might look like a pullback opportunity. Now over in real estate, all of a sudden, we have put in higher highs and higher lows, right? So, I don't necessarily know that I would be bearish if on real estate, I just don't really feel like I'm a bull personally, I guess is maybe a good way to put it. I feel very indecisive right now. And that's one thing I've learned over the years is never be afraid to say I don't have a good read or I'm not liking what I'm seeing. I'd rather, admit it than try to, I guess, BS my way through it, selfishly speaking, right? So, and if I tried, you guys would probably catch me anyway and call me on it, and I hope you would. So, lastly, over in communication services, much like the overall market, we were able to kind of rally back. We did close again, above that 50 period moving average. For me, and again, everybody's going to approach this different, I get it, but for me, this is still not something I would be interested from a bullish point of view until we take out this trend. That is how I will be looking at it. Until that trend is gone, I will be looking at this area, overall from a bearish point of view. But for the first time in a little while, maybe there's reasons to have at least a little bit of faith. We have Facebook trying to break resistance. I don't think it's done it yet, but it's trying to break a little bit of resistance. And as we know, that is a key component of this ETF. Google as well, not looking terrible. We've kind of established that higher high and higher low in a little bit of a pullback phase with a pretty strong level of support at that $1,000 mark. So maybe they'll have what it takes to break resistance this time. The first time I felt comfortable saying maybe on these guys. So I guess they're doing something to win me over. But again, these things haven't happened yet, right? These are, if these happen, then maybe we're able to kind of get back into an upward trend over in the sector as a whole. So again, we really didn't get a lot today. We did see quite a bit of selling over in the utility sector. Some sectors, I think held up a little bit better than others, but I don't think anything really has changed from a technical point of view from our reads on Thursday and Friday. As we continue to try to figure out what we want to do at that resistance level. Maybe the Brexit vote tomorrow can push us one way or another. I don't know. We shall see, I suppose. So another fairly uneventful day in the equities market. Over in the VIX, little bit of upward movement today. I know down, nice red candle, but we did see a little bit of movement to the upside, as nothing dramatic, but a little bit. Now we saw a little more selling, right? Not a lot, but a little bit more here today, and maybe a better way to put it, not quite as much buying today. And so VIX ever so slightly inching up a little bit. Over in gold, we continue to consolidate between that 1280 and that 1300 range. Really, I don't really think there's anything to say here that we haven't said, several times on gold. Our prices are pretty much at the same locations, at 1280 and approximately 1260. If you look at the intraday, we are kind of starting to develop another little floor, in this 87 range, this 1287 range. I don't think it's enough of a floor to call it a floor like 1280. But we are starting to develop a little bit of a intraday floor at around 1287 over in gold. But really, until it comes out, I expect it to, need to take a break, above 13. And I am overall bullish on gold personally, but 13 is not an easy thing to break, right? However it plays out. So after a nice extended bullish run, it's not a bad thing that it's gone sideways on us. Silver, same deal. We are seeing a little stronger movement on the intraday on silver right now, kind of established into a little bit of an upward channel on the 15-minute time period. Nothing to go too crazy about, but did find it interesting nonetheless. Really kind of continuing to build a little floor. We're starting to get an idea of where our floor is. Haven't seen that upward movement just yet in silver, but again, I do expect for the, my opinion is that eventually we're going to see these, work into these 16 on silver and 1300 on gold. I just don't think we have those signals developed just yet. But at the same token, I don't think you can say we have any bearish signals that have developed over there either. Oh, natural gas. I knew last week when I said go sideways for another week, it was too much to ask, and it certainly was. We had our first bullish signal, of course, on Friday going into the weekend. I can only speak for myself, but with the volatility of natural gas lately and how much it's been gapping over week to week, I didn't think it was a good idea to hold any trade on natural gas through the weekend. Certainly didn't disappoint. We certainly gapped up here again today, much like we've seen on natural gas. It pushed through, and I want to bring this up into, I want to be able to see it. So let's try a 2-hour chart here. Maybe I'm going to go to a 4. I want to try to make this as clear as possible because I find it fascinating how it develops. So here's that sideways, that we watched for a while, that, those of us were here, were thinking, at least I know I was thinking about a bullish breakout opportunity, then gapped up and kind of ran from there. Well, we gapped right into that on today's open. So right on to today's open, gapped right through it, filled up all of that nice clean space. And of course it did. Good for anybody who was in it. Happy for you. I wish I was with you. But ran right into it and then kind of drifted before breaking out of that. And that's kind of where we saw the majority of our price action. Womp right into it, immediately profit taking comes in, but then we break through, back through, and then whoop, ran, closed 13% up on the day. Continues to be a very difficult and in some ways frustrating, just because I'd like to be there. I'm sure you guys would too. And it's not something that I felt, at least, has had good entries as of late. So, I just waved at it as it went goodbye without me. We are working into this old breakout point. That is our next level of resistance. If we can take that out, we'll start to be seeing some interesting bullish signals, right? We, kind of established some support. We, broke out of a little ceiling. We crossed back above the 9, and now we're above the 20, the 200 period moving average. So it'll be interesting to see. I think we can watch this general range as the week progresses. This old resistance and today's low is our support, and this old breakout point just north of us as our resistance zone. Ideally, what would happen is we consolidate here for a little bit, at least from a bullish point of view, we consolidate before breaking out, kind of like we did back here, right, where we gapped up a much bigger candle. So again, I can't see a scenario where this works out, that the trade's there that I'd like to take, but I can always hope for it. But we, have that nice price, gap, nice price appreciation, and then really go sideways for a period of time before breaking out of that ceiling. So hopefully, if we're looking at this from a bullish point of view, something like that can develop over the next little while. I'm not going to get my hopes up, because every time I've asked for a floor to develop for a little while or a ceiling to develop for a little while, it does just enough to say, you know what, and then it gaps over the next open. So but strong movement over there, no doubt. We do have in my mind, that is an area that we want to keep an eye out on. That has been a important zone, right? Important price on natural gas. Beyond that, I mean, we'll have this high, that we were dealing with way back here, but really just some flat, a flat 50-day moving average, some old support. We'll have some things to watch out for, but interesting. Now, of course, resistance could easily just push us back down, which would be okay too. Right. So for me, again, sorry, natural gas, you're going to have to be probably on the watch list for another week. And lastly, over in crude, of course, we saw it kind of, bump into the 50 period average on Thursday, break it on the intraday on Friday before selling off and closing near the lows. And then we saw more downward movement here today. We've actually, worked right back in to a level of support that is starting to develop. Now, in my mind, 50 is what we're watching for. So while I would argue that a break below 50.50 would be a short-term sell signal, that's all that it would be for me, because I think 50 is the number to be looking at. But we are seeing, a little weakness after that nice upward move. It took a little while, right, for us to kind of break some support, but we've now done that. We're kind of back into that. Okay, now we're making lower highs and lower lows. For me, above 50 is not a bearish play. I want to see how it develops off of 50. If it falls right through it, I would argue that's a sell signal. If it bounces off of it, I could make an argument, I think, that it's a bullish signal. So I do think 50 is going to be important. I don't really have a strong opinion one way or the other. I do want to see it test that 50 and see how it plays off of that. And it looks like, well, it may or may not get exactly to 50. It looks like it's going to get fairly close to it. So I'll be very interested in seeing how that plays out. Of course, we did see that nice break off of 50, right? It was a nice floor turning to a 4-hour chart just to make it a little easier to see. Nice floor. We were all waiting for it to break 50 for a sell signal. It gave that to us, worked into that 43 support, rallied back up, and really nice little break off of that. So, in my mind, from a charting perspective, you want to see it test that $50 to test that old support, now old resistance, is that going to hold for us? Folks will use that as an entry price, just enough. I don't know. And if it falters, well, I can only speak for myself. But if I'm one of them, or if I'm in it right now, that's my line of defense. So I think that we'll continue to watch 50. And for me, at least, that's the price to be looking at here. Our numbers really haven't changed over the last week. It continues to be 50 as our support zone, continues to be up here in the mid 54s as our resistance zone. We can kind of add that falling 50 in there as well. We've already seen some price action off of that in the short term. So it should be fun to see where crude takes us this week. And we don't want to forget about our old friend, the dollar. After working back into those old shadows on Friday, consolidate a little bit of downward movement, but nothing really dramatic here today. In my mind, this is still a short-term, more bearish than bullish chart. I do continue to feel overall neutral with a side of bearishness, personally, not super bearish or anything like that. But we have seen that break of support, those fails at resistance. I'd like to see it test that 200 period moving average. I still expect that is where it wants to go. So those are kind of what my personal expectations are. I don't know if it's going to be here at these lows or up at that 96. Those are going to be the two price points I will be watching out for. And Abel brings up our old friends in Dish. So let's go take a quick peek here. I think you could make an argument, yes, Abel, that these guys have set up a trigger price. And I wouldn't really fault anybody for being bearish in them. From a first line of defense, we've kind of established that high and seen that downward movement, right? And that's really what it always comes down to me first and foremost. We stopped going up and we started going down, right? Because we're traders. If this gets there, we might be interested in selling, right? But only if it moves, right? So that's just the way that, I think as traders, we think. So I do think that is the case. Now, I think you could make a strong case, Abel, and I would make it, that while I wouldn't argue with anybody who had moved into it, I would, today in particular, I don't think that was a bad entry point. But if I'm not in this right now, or if I'm thinking about this last night, I'm looking at this low point here, which is kind of lining up with my moving averages. I think it probably, for me, and again, I'm fairly, conservative in my approach for sure, Abel, but for me, I think taking out that would be better confirmation. I don't feel like I have to pay a whole lot more to get that confirmation in this particular case. So, if I'm in it, I wouldn't, I wouldn't be a bull unless it breaks above here. So, if anybody's a bear, I would not be on the other side of their trade as long as we hold below these highs that we, set up last week, which line up with these lows. We had this little fake down, right, for a small period of time back here. Since we are here right now, if I'm thinking about entering, Dish myself, I'm probably going to let it take out that level just for that little bit of extra confirmation, Abel. Does that make sense? So it really could probably go either way depending on your rules and how conservative you are in your entry techniques. I always like to get things out of the way, and so I'm always kind of the trader that thinks, I want this gone because, well, I don't think it's a big deal. It did move off of this price before. So that's just the way my brain thinks about trading, for better or worse, and so that's how I would look at this. But certainly a very interesting bearish candidate, no doubt. If you look at it on a weekly chart, that's a pretty a nice breakdown, retrace to the breakdown point, confirmation. Again, we're just 1 day into this week's candle, but the way it looks as of right now, that would be a confirmation candle on the weekly, in my opinion. Again, this still 4 days left this week. So yeah, so I would say so. I think that signal would be the break. I think we've got plenty of bearish signals in here. For me, again, right or wrong, better or worse, it would be the break of this last line of defense, if you will. When I think about what I get if I wait, I take out this, I don't have to worry about this as a potential support level. I've already taken out my my 9, and I would take out my 20 if I were to let that. So I'd get rid of all the moving averages that I use. I'd get rid of that last level of support that may or may not be a huge level, but it's still there, right? And so for that small movement, I get all of those things, right? If support, if this low is set up down here, for example, I might feel a little bit different. I still like that, but how much am I getting for waiting, right? And so that's how I will always look at things. How much does it cost for that little extra confirmation? And if the answer is not much, I'll always say, we'll wait for it then, and like I said, no one will ever accuse me of being the boldest man out there. So I hope that gives you some ideas, but a very interesting pattern. I really like the way that these guys are setting up, Abel. I am with you overall from a bearish point of view. I love that weekly chart. I absolutely love how that weekly chart is looking from a bearish perspective. So I like where your head is at on Dish. Like I said, I don't think you can be a buyer until bare minimum we break that high that we put in yesterday. I wouldn't buy there, but I don't think, technically you could be one until that happens. So appreciate you sharing that, Abel. Always fun to look at charts, never get tired of looking at them. And believe me, I look at lots of them. So ladies and gentlemen, I guess that's going to do it for the market recap for today. But as always, it is certainly my pleasure, and I do appreciate everybody's time. It's always great to see you guys. And hello, Thiago. Thiago, I couldn't find you on Twitter. I know I've seen you over there before, but I couldn't. I was looking for you, and I couldn't find you. I'm going to try to find you, and I'm trying to put together a list for our team tackle, a Twitter list for us. So if you guys do use Twitter, you can. I made a little post in the clubhouse. You can, send a tweet to the Tackle Trading Twitter, or you can tweet me at FrankMartin23, and it'll take a minute to get that all put together. But would love to have you and make it a little easier for us to communicate on Twitter. I still get lost on Twitter, but I'm getting better at it. So I will hope to see you guys over there. But thank you guys so much. It's always my pleasure, and I do appreciate everybody's time. If you are new around here, be sure to subscribe to the channel and hit that notification bell so you can be alerted to any new videos or live streams that we're doing over here. And be sure to hang out with us over at Tackle Trading on Twitter as well. Always love to have you guys over there. And like I said, if you ever want to come hang out with me, it's just Frank Martin 23. So you can also come hang out with me, although I'm on tackles more than my own. So if you enjoyed the market recap, it is always helpful and appreciated if you do give it a thumbs up, just to let us know that we're on the right track over here. With that, ladies and gentlemen, I'll let you get the heck out of here for the day. But as always, happy trading, and I will see you all tomorrow. Thanks, everybody.